Good afternoon and good morning. My name is Felix Shipkovich, and I'm joined today by my colleague, Ivan Bowser Caballero. And today we have a fun and interesting subject matter to discuss, a subject that has been quite uh, on the minds of many of our clients, interest of our clients, and we've been asked to do a webinar. And we always appreciate when our followers ask us to cover a specific subject matter because it's of interest to them, and as such, we put together this presentation. The subject of the presentation is regulatory overview of consumer loan brokering in the debt relief space. Now, before we dive into this presentation, I need to say that the focus of this particular webinar is going to be surrounding whether or not consumer brokering materials or mailers or any type of digital advertising that is done for the purposes of soliciting consumers to offer them loan products is subject to any type of state or federal regulatory requirements, or any licensing is required. The subject matter itself is quite vast, so we will focus specifically on the licensing part. In the future, we'll do other webinars and we could focus on other different parts of the loan brokering spectrum of the subject matter. But specifically here, we want to talk about and touch upon specifically when and if a company, particularly a marketing company, a lead gen company, or in the debt relief space, front-end company, should be thinking about being licensed as a loan broker in some states. So let's move forward. A little bit about myself. I'm a regulatory attorney. This is what I do. I live and breathe regulation. I work in various areas of law. I generally consider myself a fintech lawyer, although I do a lot of work in the debt relief space. I work with debt settlement companies, marketing companies, payment processors in this space, various vendors, banks. I also do work with, various financial services companies outside of this space, including technology companies that are based out the world. We do a lot of regulatory work for these companies who are looking to come to the US, or US companies looking to do business abroad. I also teach law, something I'm very passionate about. I say this at all my webinars and all my in-person events. I probably received an announcement. Last week, I had a textbook published with Caroline Academic Press. So if you're ever looking to, look for an alternative to melatonin and look to read the 724-page textbook on digital coins and cryptocurrencies, law and regulation, please contact me. No, it's actually a fantastic textbook, and I think that there's a significant need for good materials in that space. But it is my passion. I like doing that, and I enjoy doing these educational webinars, not just in the debt relief space, but in other regulatory subject matters as well. Yvonne, please introduce yourself.
Hello, everyone, and thank you for being here today with us. My name is Ivan Bowser Caballero, and I have been counsel with Shipkovich for almost 3 years now. I focus primarily on transactional services in the financial services and debt relief spaces. Primarily, I do a lot of work with licensing and working directly with regulators in all of the 50 states and helping assist companies like potentially the ones you may operate in regulatory issues and licensing. And I work alongside Felix with a lot of the regulatory issues surrounding both debt relief and financial services.
Thanks, Yvonne. Yvonne, by the way, is an amazing attorney, a great regulatory attorney, and she said she's been with our firm for 3 years, and she really does have sometimes, that first name basis relationship with some of the state regulators that she works with on licensing. So thank you, Yvonne. A little plug about our upcoming in-person workshop. We recently announced ticket sales. It's going to take place. The kickoff will be in the afternoon of January 25th, and then followed by a full day of content and material. Exciting panels. You'll get a chance to meet our firm's staff. We will discuss, of course, subject matter relevant to the debt relief space. In the past few years, this is our fourth event. In the past, we've had, during COVID, we've actually, one of the events we had 4 state regulators attend virtually and presented. Last year, we were very lucky to have Bryce McNitt from the CFPB present our event. We have a fantastic agenda, which will be announced in about 2 weeks. We're also very grateful to the Women of Debt Relief and to Teresa Dotson. All of the ticket sales will be donated to Women of Debt Relief. We believe in the hard work and dedication of Women Debt Relief and hope that we will see you there. The space is limited and the tickets are selling really quickly, and hopefully you'll get a chance to join us in person. And we have fantastic networking events that are being actually sponsored by a lot of great companies in the space. And I'm, with Thanksgiving around the corner, I wanted to personally thank all of the sponsors listed right here on this slide who have been so generous to sponsor from anything from breakfast, lunches, to happy hours, IT services, food, and obviously this will be all presented very shortly in the agenda, but CDRI, CFTPay, Reliant Global, Veritas, Forth, thank you. Thank you from the bottom of our heart. We are very, very grateful for your continued support. Most of these companies have been supporting our workshops and covering the cost of the food and IT services now for several years, and we're very, very grateful. So as always, thank you. Anyway, let's get back to the agenda for today. I want to start off with the very first bullet point. The focus of today's discussion is whether licensing is required for companies that are marketing loans to consumers in the debt relief space. Right? That's the focus of this webinar. The subject matter, as I mentioned a few minutes ago, is quite vast. You could spin off into different segments. You could talk about what needs to go into the mailers, the different disclosures. You could go. You could easily take the entire day and talk about what falls under the regulatory purview of consumer loan brokering. It's not a simple subject matter. So my job today is for you to learn and enjoy what really is covered under what really is consumer loan brokering, right? What does it mean? How is it different from lending? There's actually a lot of confusion. It's normal to have that confusion. I'll explain to you where the confusion comes from. Why consumer loan brokering is relevant in the debt relief space. Again, the focus is on the debt relief space. We have to be mindful that consumer loan brokering exists in other areas. I mean, you could do consumer loan brokering for anything. I'm sure you probably received a lot of mail. I'm sure you've seen advertisements on Facebook, or you just received advertisements, period, for loans. And those are exactly, sometimes they're directly from lenders and sometimes they're done by third-party companies, but not necessarily in the debt relief space. But today we're focusing on the debt relief space. And we'll talk about the regulatory issues. And finally, Yvonne will cover the state level regulatory overview. She will discuss some of the statutory language that we need to be mindful. The reason I have this asterisk on the bottom, we will not discuss mailers or regulations surrounding mailers. We will not, because again, this would be a different topic for a different webinar, even though it does surround consumer loan brokering. So what is consumer loan brokering and how is it different from lending, right? How is it different than lending? Right there on your screen, it's pretty simple, right? Let's not even waste time to spend more than 20 seconds. Well, loan brokers cannot originate loans, right? They can advertise, they can solicit, they can assist consumers in obtaining consumer loans from a third party meaning it could be a bank, it could be a lender, right? They can work with one of the lenders, right? And they may or may not be regulated depending on the state regulatory environment. Consumer lending is lending, right? That's simple as that. Consumer lenders can do what consumer loan brokers do. They could advertise their products, right? It's kind of the higher level license, as you could say, and it's regulated in every state. I want to also be very clear that obviously banks generally can do loans, right? Both on federal and state level. Credit unions could do that, but we're not going to discuss the banking side of the industry. We're just focusing again on the consumer lending or consumer brokering in the debt settlement space, right? So let's start with the very most simplest examples, right? And so here are the few examples of what is defined as a consumer loan brokering. So let's start with the easiest one. Most of you on this call probably have heard of the nationwide multi-state licensing system, NMLS. NMLS is a system that uses basically this online platform that you use to be licensed as a loan broker. NMLS uses it for, be licensed at some companies, money transmitters. I mean, my goodness, it's sort of becoming one of the most major hubs to get licenses. And so it defines consumer loan brokering as providing the service of bringing consumers and lenders together to assist a borrower to obtain funds for personal, family, or for household purposes, not including loans secured by real property. Not including loans secured by real property, right? I just want to make sure you understand that, because that doesn't necessarily, say that they basically say unsecured loans, right? Now, the next two states, and I'm specifically using Mississippi and Virginia as an example, because in the next slide, I'm going to give you completely two different definitions. And again, the idea is to show you how the laws describe consumer loan brokering, right, very differently from state to state. Very, very differently. And Yvonne will go into more detail. But in Mississippi, a consumer loan broker means a person for compensation from borrowers. Finds, obtains consumer loans or credit cards for borrowers from third-party lenders. But the key word here is borrowers, right? Not lenders. So, in Mississippi, in order for you to be a consumer loan broker, you must be compensated from a borrower, right? In Virginia, arranging a brokering means with respect to consumer finance loans, negotiating, placing, or finding consumer finance loans for consumers, or offering to negotiate, place, or find consumer finance loans for consumers. My goodness, this is so wordy, my tongue is hurting. In return for compensation paid directly by the consumers. Let me repeat the last part. In return for compensation paid directly by the consumers. So you have Mississippi and Virginia say loan brokers are defined of those who are paid directly by, directly by consumers, right? So if you're not getting paid by consumers, if you're not getting compensated by borrowers or by consumers, so you're not a loan broker? Maybe, right? Again, I just, this is not a legal advice, but that's exactly how it says. By the way, I see there are hands. I'm not going to be answering questions in this webinar, but you have my contact information. I'll have it on the last slide. I'm happy to answer questions, after the webinar, but yeah, just kind of say. So I want to focus on this, right? Just so you see how Virginia and Mississippi. Now, here you have Louisiana, Iowa, and Rhode Island. Very different definitions, very different. Louisiana, a loan broker, right, is defined as any person for compensation or expectation of compensation, which is kind of interesting, or expectation of compensation. Why would you even put that in the language? But anyway, for compensation, expectation of compensation, obtains or offers to obtain a consumer loan from a third party for another person. So this doesn't matter who's paying you. This doesn't matter who's compensating the loan broker. You must be licensed as a loan broker, okay? You must be licensed as a loan broker. It doesn't matter, okay? Iowa, loan broker or a broker means a person who promises to obtain a loan or credit card to assist in obtaining a loan for another from a third person who promises to consider making a loan offering to issue a credit card to a person. Again, nothing about who's compensating, but here's a definition of loan broker. And finally, Rhode Island, small state, loan broker means any person or entity who or that for compensation or gain expected for compensation or gain, either directly or indirectly solicits, processes, negotiates, places, sells a loan. Anyway, again, generally compensation. So Louisiana, Iowa, and Rhode Island are quite very different, as you see, than the preceding two states. Let me see if I could go back to that slide. But anyway, you see that for the previous slide. The Virginia, as the laws in the preceding slide. Okay, so now let me quickly talk to you about the lenders. This presentation is not about the lenders, but when you're talking about consumer loan brokering, it's impossible not to just mention the lending side, right? Because there's a lot of interest in the consumer loan brokering space, particularly in the marketing side. And I get it. I do. You know, I service a lot of companies in other areas in the fintech space, in the payment space, crypto space, banking space, different technology service provider. And there are companies who are just dedicated to just marketing services. So when they see an opportunity, you need to understand why is there an opportunity. So let's talk about how this specific opportunity came into place in the debt relief space, right? We need to identify it. And to identify that opportunity, we need to understand that the consumer loan brokering space opportunities stem from the lending space, right? So first of all, the type of lenders, well, they're usual suspect, right? You got your banks, your credit unions, and you got your non-bank lenders. So that's easy, right? We don't need to spend more time. But post the 2008 financial crisis, you have a significant rise in non-bank state-by-state lender institutions, non-bank lending licensed institutions. Why is that? Following the 2000 financial crisis, we have Dodd-Frank. Dodd-Frank created significant capital requirements, significant compliance requirements on banks and credit unions. Most of the banks that closed their doors had absolutely nothing to do with the 2008 financial crisis. I've done many interviews in the press about this. By way of background, I used to practice derivatives law. I used to be on the banking side, institutional banking side as a lawyer. But unfortunately, they couldn't sustain. So as a result, we lost well over 10,000 small and mid-sized banks and credit unions, which really were sort of the bread and butter for your mom and pop shops. And result created a significant number of unbanked and underbanked in our country, right? The bigger banks got bigger, but the small and mid-sized banks could not survive and they closed their doors. So what happened was that, that gave an opportunity for the state licensed lenders to come in and obtain licenses. And that's what we've seen. We've seen that rise from anywhere from 2012 to 2018. We've seen many of these state licensed companies coming into place, right? And so that gave rise to the state licensed institutions. And that rise gave then interest to say, how do we then, if you're licensed in one state, how do we then market a lending product to consumers across state lines, right? Because if you're licensed in New York, you don't have a license in New Jersey, then you got to go get licensed as a lender in New Jersey, right? Non-bank lending license. It becomes difficult. So there was a push by the Office of the Comptroller of the Currency to propose what's called a true lender rule. And a true lender rule, as you see, was a short-lived rule. There's really no point to go into the rule, but I wanted to mention this. The rule was very helpful to some and not helpful to others, right? It was very helpful for many lenders and banks who wanted to reach across state lines and underwrite loans for individuals, but then sell those loans to non-banks, who are able to then, monetize that transaction. Unfortunately, literally just months after it went into effect, a number of states, including New York, sued and the OCC. And well, before litigation went anywhere, the Congressional Review Act killed it, and the lawsuit, the litigation became moot, and the true lender rule doesn't exist anymore. So how does it all relate? How does the sort of this short-lived true lender rule and the rise of the state-by-state licensed lenders play into the consumer loan brokering space? So now you have lenders, right? How's it relevant? How's it relevant? You now have lenders who are existing on state-by-state basis, right? So if you're marketing their product, right? Actually, let me go back to this slide. This is really the slide. If you're marketing their product, you have to be marketing the product in the state where that lender is licensed, right? That lender is licensed. Because if you're marketing a product where the lender is not licensed, you have a problem, right? So that's one. The second thing is, well, in order to market a product to a consumer, any type of product, and particularly a consumer loan product, you first need a lender, right? Because if you don't have a lender in the space, then what are you marketing, right? So you first need a lender. That's number one, right? That's your first thing. And then the next thing is once you have that lender, you need to know is that lender licensed in that space. But once you have a lender, right? And once you're able to actually, either know that your mail piece, or your digital advertisement is compliant, you are able to potentially offer another debt relief tool, alternative. And let me explain to you why I say that is, right? So, there are generally three debt relief, generally saying. There's credit counseling, there's bankruptcy, and there's debt settlement, right? We could talk about maybe others, but I'd say there's generally three. But this consolidation loan, right, that's being marketed, right, assuming payments are made, into the debt relief program, is a very good way. It's another tool, let's kind of be honest about it, that could potentially provide an opportunity for individuals to, hey, consolidate this into a single payment. Now, certainly, if this is not, proper for all consumers and their risks, and right now with high interest rates, they do carry high interest rates. But, that's another tool. Whether or not it benefits a consumer, that's not for me to judge. But it is a tool, right? It is a tool to become potentially debt-free sooner, right? Depending on the circumstances of the consumer, right? It's also potentially fast-tracked, right? Again, depending on the circumstances of the consumer, depending on the amount of debt, depending on what are the interest rates, because sometimes the interest rates combined and the principal growing and, and potential litigation with creditors, this could be a potentially, again, another way. So when these consumer brokers are advertising this, they're advertising another tool, right? And that's what this is what this loan brokering product is trying to accomplish, and that's the relevance of it, right? But when you market these products, you need to be mindful of very important issues, right? Well, first of all, again, when you're marketing that product, when you're sending out that mailer, right? When you're sending out that mailer, assuming you've done and Ivan will talk about very shortly whether or not you're licensed, or whether or not you check with your compliance team or your counsel whether or not you've got the proper licensing in the state, or whether the lender, in fact, is licensed in that state. That's an important part, right? That's part of your due diligence. That's part of your regulatory due diligence. Another thing is, are you advertising the right interest rates? Again, we're not here to talk about the mailers, but you do need to be mindful of state laws that prohibit certain interest rates because of usury laws, right? So I've seen mailers that have interest rates that are being sent to consumers, even though the lender's licensed, but sometimes the lenders also make mistakes. And sometimes there's a lack of communication between the lender and the broker. And I've seen that, right? I've seen that when there's that sort of the disconnect. Are they advertising the right interest rates? So you want to make sure that the interest rates are not mismatching the two, right? Are you including all the proper disclosures? Again, very high level here, but you want to make sure in the state level you're including all the proper disclosures. Some states have disclosures that require you to include certain type of, this is not a check, this is not this is a solicitation. They require you to have certain font. We'll talk about some of this at our in-person event, but the states, unfortunately, they don't really do such a great job in terms of prosecuting some of these failure to include the proper disclosures, because obviously they have bigger things on their plate. But yeah, you should check. You want to make sure that they have the right disclosures. You also have to be mindful of UDAP. I mean, UDAP applies across the board. I think a lot of people, particularly in the debt relief space, always think that UDAP applies to debt settlement companies, or no, UDAP will apply to consumer loan brokers. And also be mindful that just because there's no legal precedent in the debt relief space, right? There is legal precedent in the consumer brokering space in other areas, right? You have to be mindful that consumer loan brokering has existed for a long time, and even prior to Dodd-Frank, banks have advertised their services, and they use third-party marketing companies to advertise their services way before the Great Recession. So I can assure you there's a lot of legal precedent in that time. Finally, look, you have to be mindful that we have regulators, right? And the Federal Trade Commission, the CFPB, the DOJ. By the way, I included the DOJ. I've seen the DOJ get involved in some of the lending and loan brokering space recently. Obviously, what I would consider a little more sloppy type of work, but yeah. State attorney general's offices have been looking into the consumer loan brokering spaces, and obviously we have state regulators. I've seen state regulators that even in states where it's not licensed activities have looked into this type of activity. So I'm going to turn it over to Yvonne, who's going to talk about the state level regulatory environment.
All right, everybody. So I am going to speak on the state level regulatory environment, in particular, focusing on what states require licensing or registration and what kind of licensing or registration is required. So depending on the state, consumer loan brokering can fall into one of three different regulated buckets. The first is loan brokering independent of lending. The second is lending to include loan brokering. And the third is potentially no registration or licensing or regulatory requirements by the state at all. So when you are thinking about these three buckets, you need to keep in mind that the requirements for licensing or registration are going to be very different for states that regulate loan brokering as an activity independent from lending, and those states that regulate it under the same purview as lending. For example, with states that regulate the activity independent from lending and regulate it solely as loan brokering, there are many states that just require maybe a simple registration, the filing of a registration statement, depending on the way that you're compensated, potentially keeping a surety bond on file with the state, filing copies of your agreements with the state just to ensure you are incorporating all the proper disclosures with consumers and adhering to any sort of fee regulations. In those states where loan brokering falls under the definition of lending, and we will get into the specifics of these definitions in the next couple of slides, the requirements for licensing or registration are going to tend to be a little bit more difficult. With these states, you may be required to maintain certain minimum net worth or capital requirements, submit business plans, file larger surety bonds with the state, submit company financial statements for the company and potentially any parent companies, submit background checks or credit reports for all control persons of the company, among other requirements. And again, just as Felix mentioned, I do want to stress that, this is a complex matter, and our analysis is based solely on regulation at the statutory level. And, this is going to vary depending on the operations that you plan to engage on, which is why it's always important, to check with compliance or, your regulatory counsel as to what bucket your company's operations will fall under. So we're going to start with the simplest bucket, which is states that do not regulate consumer loan brokering, or states that do not require loan brokering licensing or registration. So there are a number of states that have excluded consumer loan brokering from their lending regulations, or have decided not to regulate consumer loan brokering at all. And this is also true depending on how you collect fees. For some loan brokering activities may be exempt from regulation, and you will not require registration or licensing. For example, with the definitions given in Mississippi and Virginia, if you are not being compensated by a consumer directly, or being compensated by the consumer at all, you may not be required to register or license as a loan broker in that state. Another great example of this is in Illinois. Loan brokers are generally required to be licensed under the Illinois Loan Brokers Act, but the act allows for an exemption for any person whose fee is wholly contingent on the successful procurement of a loan from a third party, and to whom no fee other than a bona fide third party fee is paid before the procurement. So here, if you aren't accepting any fees unless you successfully procure a loan from a third party, and no other fees are paid before you successfully procuring that loan for a consumer, you would be exempt from having to be licensed under the Illinois Loan Brokering Act.
And I also want to add a few things here, just Yvonne. And this is why it's important to look at every state where you're planning to send out mailers or advertise. These state definitions are so different from state to state. It's truly amazing. I'm still baffled at why states can't get together and really come up with some kind of level playing field. And then the other question that a lot of our clients ask is, well, how come you have that disparity, right? Why is it in some states, you have a requirement to license regardless of who pays you, and some you have borrowers and some don't really care? And you have to look at the historical aspect, right? In some of these states, they really just want to regulate the lenders. They're saying, look, we don't care. We were, every state regulates lenders. However you like it, they regulate lenders, right? So they're looking at it. We care people who actually, write those checks, issue those checks to consumers. We want to make sure they're not breaking usury laws. We want to come in and audit them, right? And by the way, we want to see when we come and audit them. And by the way, they do audit them quite regularly. Sometimes every year, sometimes every couple of years. They will look at who exactly is advertising them and how they're advertising the services, and they're going to hold the lender accountable, right? So some of these states that don't regulate, they're just going to hold the lender accountable. That's how they're looking at it, right? It's not the fact that they're closing their eyes. No, they're just going to hold the lender accountable. And the other question is, why is it the borrower? It's a good question. I don't know. I don't know. I wish I had the answer for this. I don't know. We could probably have a good conversation over a few cocktails to say, why is it? I mean, I've seen clients. I do have clients who are being paid by borrowers. Yeah, even in the debt relief space, believe it or not, they are sometimes paid by borrowers. Not often, but sometimes. But most of the time, they're not, right? I don't know. I mean, your guess is as good as mine. It's only a handful of states that really have that borrower language. And then you have some language that's very vague. But before people get really excited, sometimes they say, Felix, Ivan, can you send us a list of the states that don't regulate it, right? And we send a list, right, generally, but then you also say, we need to look at your mailer, we need to look at your digital advertising, because that is really the crux, right? We need to look at the substance, right? Because one of the things that, and those of you who obviously on this call worked with us know that we don't want to just say like, oh no, the law doesn't work in the way that no, something is not regulated. No, something may be regulated, and just because you may not have the statutory implication specific that you are not licensed, guess what? You still, like I said in the previous preceding slides, you still have other federal and state bodies of law that could hold you accountable. So you still need to be very, kind of tread waters really carefully to think that, hey, it's unregulated. I could do whatever I want anyway. That's kind of my. I assume you're ready to move to the next slide, Yvonne, right?
Just one
Yeah.
more statement, just building off of
Yeah.
what you said for the non-regulation of consumer loan brokering. Just because you don't need registration or licensing also doesn't mean that there aren't other statutes that you still have to adhere to requirements and prohibitions for. For example, in Iowa, there's no requirements or licensing or registration, but you still have to adhere to all of the requirements and prohibitions of the Iowa Loan Broker Act. So just because we state, maybe a state doesn't have a registration or licensing requirement doesn't mean that there aren't certain statutes that you still need to be adhering to. All right. Now, the second bucket of licensing is consumer loan brokering regulated as loan brokering. And by this, I mean it is kept independent of the statutory regulations for lending. So many states have defined consumer loan brokering independently of their lending laws. So going back to Illinois, a loan broker means any person who, in return for a fee, commission, or other compensation from any person, promises to procure a loan for any person or assist any person in procuring a loan from any third party who promises to consider whether or not to make a loan to any person. So this language right here pretty much encompasses all loan brokers. Again, you have that broad language about regarding compensation from any person, regardless of whether it is a borrower or the third party who will be providing the loan. And it is unlawful for any person to engage in the business of loan brokering unless registered under Illinois' Loan Brokers Act. Again, we're not focusing on any exemptions here. So this is why it's important, for your regulatory counsel or your compliance team to fully understand the breadth of your operations as a loan broker, to properly ensure that you're being registered or licensed in a state that you're operating in. And again, we see, in North Carolina, loan broker means any person, firm, or corporation that, in return for any consideration for any person, promises to do any of the following: procure the person or assist the person in procuring a loan from any third party, or consider whether or not it will make a loan to the person. And prior to placing any advertisement or making any representations to prospective borrowers in North Carolina, every loan broker needs to file registration with North Carolina's Secretary of State. So again, we have a very broad definition of loan broker with consideration from any person. And in that state, you will be required to file registration, file a surety bond, file your agreement with the Secretary of State, and ensure that you're adhering to all the proper disclosures and prohibitions and requirements from North Carolina's Loan Broker Act.
And maybe we could quickly touch base on like, what does it take? Yvonne, you've done these applications. Give you a high level maybe before we move to the next slide. What is one to expect when they're applying for a loan brokering license?
So typically with loan brokering licenses, as I mentioned in the previous slide, typically with loan brokering, you're not going to see as extensive or difficult requirements as you'll see for loan brokering that's regulated as lending. But like I previously mentioned, most of the time you may need to file a surety bond with the state. You will need to potentially file your agreements with consumers with that state to ensure that all proper disclosures are being included. You may need to file some sort of registration or licensing statement or application detailing the specific information of your company, such as who the directors are, who the officers are, where that company is primarily incorporated, or if you're not an incorporation, where that company is primarily registered, providing certain certificates of from states, ensuring that you're properly registered as a foreign corporation to do business in that state. So just because a state doesn't regulate loan brokering, or even if there's minimal requirements as to for a registration, you always need to ensure that you're properly registered to do business in that state.
Yeah, let me also add, I don't think it's difficult. It's a difficult license to get, right? In the grand scheme of things, right? When we're, we do licenses, my goodness, this is one of the easier licenses, I'd like to say. If you want to get a lending license, it's a lot more involved. Could take some time and takes a lot more effort and money and more financial records, and the regulators will take a deeper dive into just really almost every aspect of your business plan and where you're going to be, who you're lending to. Consumer broker licenses in the states where broker licenses are required, it's not such a big deal. And I'm not trying to downplay this, but the reality is it's a broker license, right? It's not a difficult license to get, right? I also kind of, when I'm giving this webinar, right, a lot of people saying, oh man, I have to get another license. It's not a terrible license to get in the states where you need to get it. You have to fill out some forms, right? You have to file it with the state. Typically, the turnaround time is not that terrible. It could be, from the time you submit it, could be, a couple of months, and sometimes even sooner. Just want to be kind of very candid, because, the reason we're doing these webinars is to educate the industries that there is a license, right? And sometimes you need to look at this, but not getting licensed could actually have some more significant repercussions. So. But yes, Ivan is absolutely right that you do need to, even if in the states we don't don't need a license, you should still, because you're soliciting, you're targeting clients that state, file with the Secretary of State, foreign business, doing business in that state. Anyway, let me switch to this slide.
Right. Now, finally, this is the third bucket of licensing and registration for consumer loan brokering, which is consumer loan brokering regulated as lending. As you can imagine, in these states, licensing is going to be much more difficult to obtain, because these states have defined loan brokering within their legal definitions of lending, requiring loan brokers to be regulated and licensed as lenders, even though they are only engaging in typical loan brokering activities. For example, in Georgia, the definition of lender is very simple, and it includes anyone that advertises, solicits, offers, or makes installment loans, which installment loans are defined as consumer loans. So here, very, very short but broad definition that encompasses loan brokering activities as well as lending, because if you're advertising or if you're making the loan, you need to be licensed as a lender in Georgia. Now, we have Connecticut, which is the complete opposite of Georgia, where you have a very long definition as to what it means to be a lender in that state, but ultimately it achieves the same purpose as the Georgia definition. So in Connecticut, without having first obtained a small loan license from the commissioner, no person shall, by any method, including mail, telephone, internet, or other electronic means, make a small loan to a Connecticut borrower. And here I've highlighted the language that is particularly relevant. Offer, solicit, broker, directly or indirectly arrange, place, or find a small loan for a prospective Connecticut borrower. So, I mean, this statement right here includes pretty much all of the operations or activities of a loan broker that you would typically see. And again, it means no person may engage in any other activity intended to assist a prospective Connecticut borrower in obtaining a small loan, including but not limited to generating leads. So, I mean, they have really in this statute really gone down to the nitty-gritty and included all of the relevant language that you may see when you're dealing with loan brokering activities. And finally, advertise or cause to be advertised in this state a small loan or any of the services described in the subdivisions above. So no person can accept any lead, referral, or application for a small loan from a person who is not licensed or exempt from licensure. So here, it's pretty clear that you need to have a small loan license in order to do any sort of loan brokering for small loans, which I believe small loans in Connecticut are under 20,000, if I'm not mistaken. But I could be mistaken. Please don't hold me to that. And so again, you're going to have to be licensed in Connecticut as a lender, and that means providing financial statements, providing financial statements of any of your parent companies, potentially having to get credit reports and background checks for all of your officers, owners, or managers that are going to be overseeing the loan brokering activities for your company, submitting business plans, again, filing surety bonds with that state. So with loan brokering that's regulated as lending, the licensing process is going to be more arduous and difficult than with states where loan brokering has been separated or out from the definition of lending.
Thank you, Iman. Well, that concludes our webinar. This is our contact information. We appreciate everyone attending. We look forward to seeing many of you at our future webinars, and very much look forward to seeing you at our Costa Mesa event on January 25th and 26th. Thank you, and see you next time.